to give everyone a break from our back-to-back teaching with startups. And we have three great panelists with a very extensive experience in space. We have Carson from Techstars, we have Nico from Gumi, and Richard from Fabric Ventures. Guys, why don't we start with a quick roundup of our intros and just share a little bit more about each one of you and also about what you're looking in 2023 when you're going through startups.
Okay, let's see if I can remember all of that. Hi everyone, I'm Carson. I'm one of the investment leads for our Web3 practice at Techstars. I'm particularly involved with two of our programs that we do in partnership with Polygon and Filecoin. So what I do is I source and recruit startups, but then more importantly, I'm helping them out during program, thinking about fundraising, thinking about customer acquisition, partnerships, basically anything under the sun that isn't technical. Anything else you want?
And Miko?
Yeah. Hi, I'm Miko. I'm with Gumi Capital. We deployed our $21 million Fund 1 into the crypto winter of 2018. Came out with like 8 unicorns from pre-seed and seed stage ventures like YGG, OpenSea, 1inch, and a bunch of others. And I guess we're now deploying a $110 million Fund 2. So, we raised that kind of at the recent Bitcoin 60,000 level, and now we're deploying into this winter. So, we're actively deploying capital. So that's what we're up to.
I forgot I should have worn my hat. Keep it look consistent. I'm Richard Muirhead. I'm managing partner at Fabric Ventures. We've kind of come together over the last 10 years, basically. So it's been pretty much a decade in the space. Our first dedicated fund we deployed similarly at or just into the last crypto winter. YG, 1inch, Polkadot, Sorare were some of the kind of winners from that kind of cohort, if you will, that fund. As a firm, we're a bunch of people who have been involved in building actually in Web 1, Web 2, and Web 3. And we have physical, although it's unfashionable, presence kind of spread right across Europe. And we're actively deploying a fund of 125 million and a few sort of other smaller pockets, including some super early first check, 100K check, and pockets as well.
And Miko, before we had the conversation with you, and you also were mentioning that now is a bear market and it's a really good time for builders. So that's when projects are focusing on building. And I wanted to ask all of you, what do you think going to happen after 2023? What projects do you see right now that are working on some interesting new solutions and maybe disruptions in the industry that are going to change our industry a little bit after the 2023?
So based on our experience, really, like one of the things we figured out actually is that contrarianism long-term is a big winner, right? So when we invested in YGG, there was no such thing as like a Web3 guild. Like when we invested in OpenSea, there was no such thing as like NFT marketplace, right? So so the future is actually very contrarian, right? Like, in a sense, like obviously 1inch, there wasn't really DEX aggregator, right? So, in a sense, like the mindset has to be contrarian, right? So, we're actively looking for very contrarian mindsets and plays, really out of the box thinkers, and in a sense, what happens is all of our Fund 1 hits are basically crypto to crypto to crypto to crypto to crypto, right? Like all of them are kind of very circular, which we think is fine. And what we mean by we think it's fine is what we think will happen soon is last year there was $7.6 billion of venture investment into Web3 gaming, right? And we actually trust free-to-play game designers to actually are the best people in the world to convince you to buy something that you didn't even know you wanted and you didn't even know existed like a week ago, right? And that will end up being an NFT. Although the gamers won't know they're buying an NFT, they'll just buy like a sword or they'll buy whatever, skins, right? And eventually we'll like drag the whole freaking internet onto here, 3.7 billion gamers, right? So I think that's going to be the catalyst for mass adoption. So I think from our perspective, like we definitely see 2024 timeframe really is after kind of like the fun Web3 games have landed, right? So, that'll start happening this summer and into the fall. So, we're excited for that.
And Richard, what is Fabric Ventures trying to achieve at East Denver? Are you looking for builders? What was your perspective?
Well, 100% that. And maybe the best way to try and kind of demonstrate that is to build, unintended, what Mika just said, which is that.
Quick check. Are you guys in the back hearing Richard? Okay. Sort of. Okay. Go to handheld.
Yeah.
Just flip it to handheld.
Let's all do this.
Yeah.
The handheld.
Just hold it up.
You got the note early.
There you go.
I like that. It's like quite Star Trek.
Yeah, there you go.
Good tip. So we're basically saying you were talking about being contrary. So what I want to do here is like we need to try and get messages across to folks to maybe help them think a little bit in the way that will help them get funded, because there's a huge opportunity for builders, and we want to be able to partner with them. And to build on your point, like being contrary is absolutely the way to go. We love consensus in our blockchains, but consensus in decision making tends to be an emotional choice, and essentially you shouldn't trust humans when they start making decisions on an emotional basis. So move away from consensus. We're looking for people who have been contrary because they've worked through the logic of some problem they're really deeply connected with, and they get together with a bunch of folks that actually they can trust because they're good co-founders, complementary skills, all the kind of basic stuff. And then maybe we'll come on to sort of different themes of investment in a second. But I think one way of summarizing our view is that there's been a hell of a lot of crypto for crypto technology work that's been going on. But finally, perhaps after about 10 years, we might have a dApp stack or a Web3 stack or whatever that is kind of inching close to prime time, so you can actually build them. And if you combine that with what you already mentioned, the kind of whole play to earn, activity X to earn, and the gamification you can get from some of these studios and game builders, then I think that can really unlock some really great use cases. We can maybe come on to them.
Yeah, absolutely. And Carson, Techstars has a quite established brand name in a traditional tech. What are you guys doing in the Web3 and crypto?
Yeah, Techstars, we're a bit of a Trojan horse in the space. Like we really haven't shifted our focus on Web3 until the most recent hype cycle, but we do have some sleepers like Arweave and Chainalysis for Techstars companies, and we certainly have developed our thesis over time. But it's pretty clear our firm, our goal is to make 1,000 investments by the end of the year, and 1 out of every 10 of those will be a Web3 or crypto company. So we are, particularly because we focus on the earliest stages, we see when the world is starting to melt in a certain area, then we really like to pay attention to it. And so we really doubled down on Web3 and crypto just because, at least from where I sit, sourcing and hearing companies, the difference of quality between 2021 and 2022 and 23 is just massive. And so I'm in a good way. So a lot of the pretenders have left. The people who are really here to want to build long-term enduring companies have stuck around. And so for Techstars, we are really ramping up our efforts to invest in people at the early stages. So really excited.
1,000 projects. Wow. How big is your pipeline?
I'm the wrong person to ask. Bigger than I am able to track.
So actually that leads to another question. So we had 25 projects today, and everyone was given 5 minutes to pitch. And I know some projects were struggling to prepare a shorter presentation and make sure they can pitch all their idea in 5 minutes. What do you guys think is the most important in startup when they're pitching their project for the first time?
So I'm a big fan of the 10-slide Sequoia pitch deck template, right? So I think it's 10 slides, 10 minutes, right? So if you want to go down to 5 slides, 5 minutes, right? I would absolutely team, right? So get the team in, right? Then I would say it's problem, solution, product, right? And then I'd probably throw in the ask. I'd probably throw in business model maybe, but really the ask, right? Which is what are you here for? How much are you raising? What will that get? How much runway will that give you, right? So all that stuff, right? So that's what I would do. So I would do team, problem, solution, product, ask.
Another thing I'd agree. The only thing I'd add to that is is the why. Kind of like, why? Maybe in all of the slides, it's like, why does the world need this? Why is this the right team? Why is this product? Kind of really get the why across into the communication.
Yeah, that's part of the Sequoia template too. That's company purpose is what it's called, but that's a super good one. And why now too? That's a sixth one, seventh one.
Yeah, I think depending on how much time you have, you really need to be strategic. I think they covered the main things, but whenever, maybe less of like an on-stage pitching thing, but certainly when you're talking to somebody like me who's at sort of the accelerator stage or pre-seed stage, I really like to know about what is your own personal attachment to this? Like, why are you the right people? It's part of team, that's part of everything they mentioned. But additionally, it's like, what unfair advantage do you have in terms of your understanding of the problem? Like, what's your unique insight? What have you done or accomplished that's giving you a unique window or lens on a problem that makes it particularly compelling? So, only thing I'd add.
Yeah, it's the founder market fit thing.
Exactly.
Yeah, and I'm going to add a nuanced and like terrible thing just to kind of maybe confuse people with. But there's a on top of that, which sounds quite to be deterministic, quite kind of almost methodical in the way you can approach it. There's a bunch of stuff that is artistry. So how you go about talking to different investors, fundraising from them, not fundraising from them, getting the right sort of level of keenness versus kind of like, aloofness or whatever. But also in terms of how you take commentary, like everybody wants to work with people who are actually very clear on what they want to do and how they're going to do it, but at the same time listen and take on board feedback and then compute that. So there's really interesting balance to get all of those things, which we all as humans pick up in a very fine-tuned way, fold into the mix. So I think that's worth thinking about. Tough to deliver on that.
Yeah, and there's still a lot of things to mention within 5 minutes. And I wanted also to ask, how is it different between looking for pitching a tech project, just traditional tech, and crypto/Web3 project? Is it actually different, or it's kind of the same things that investors paying attention to?
I think one of the most major aspects of difference has to do with sort of like, what is the instrument? What's the value capture? What are the mechanisms, right? Like, obviously, there's lots. Like, for example, for us, OpenSea was pure equity only, right? No token, as you all know, as users, right? There's no token, right? So, like, that's fine, right? So in that case, it's almost not different, right? Because we just want to see the business model. We want to understand all the things that a normal tech company, because we're software investors, venture investors, right? So like, it's the same kind of rules apply. I think if it's a token, it's definitely token economics, mechanism. There's a lot of things to learn.
Yeah, I also think more broadly, a lot of the companies that I see at the early stage, I do have to sit down and really think critically. Why is this approach that you're taking the right one? Is this crypto or Web3 decentralized for the sake of using those buzzwords, or is there some step function or unlock that you're creating? And why is the inherent frictions of building in the space worth overcoming in order to take your approach? It's very simple, but you'd be shocked at the number of teams, particularly the earlier stages, really need to actually think through that question.
Yeah, I'd only just add to that definitely in this space, your kind of antennae for sort of spotting folks who just think, I'll use a token to raise some money, or I'm in this because I want to get rich quick or whatever. These are not generally sort of good indicators of great projects. And so we tend to be a little bit overly sensitive to that. Actually, some of my team's even more skeptical than I am, should we say. But I think that builds on the point already made about really, token economics you can leave till later. That's a better approach than people have taken historically, where they go like, boom, let's like launch a token. But that doesn't mean you can't leave the thinking and the connection with your business model, the problem you're trying to solve, till later.
And yeah, we just discussed what to avoid. And I wanted to ask, what is one thing you're looking for when you're reviewing projects right now? Because I know it's this year, many projects saying it's all about scalability and adoption, all these loud words. What are you guys looking for when you review projects?
So have a quick go, because I'm going to answer and not answer your question, because I think at the end of the day, it's very easy when you're building any startups, especially one which is as technology rich as this space, to get lost in those weeds and not think about the problem you're trying to solve. So what we're now looking for in particular areas is solving that, a real genuine problem that the world needs now, and be clear on why it needs it now. And so various areas like payments and loyalty, we think is making some very good traction. We think that after the NFT kind of gold rush, there's some real movements from the titans of media to move into what I call decal or whatever, but open media, decentralized culture, sports, entertainment, the rest of it. I think that's a real thing happening. So those are hot spaces. And I would like to think that DeSci, or the kind of whole intersection of health and decentralized data networks, or whatever you want to call them, is actually going to hit prime time. But we keep coming back to it, we keep looking, but it's very challenging, obviously, from the perspective of regulations, of laws, and privacy.
I guess I'll just give a short version. So we look for something called Gumi corn founders, right? So it's a specific type of person, and in a way, like, it's someone with a tremendous kind of founder market fit. I think if you're on the application side, then you definitely need founder market fit, domain expertise, right? So these are wonderful properties. I think, to me, it's either a history of substantial achievement to date, or something like overcoming significant obstacles to date, or both, right? So we definitely look for those kinds of like early patterns or signs, right? Obviously, like, world eating ambition is a helpful thing, and then also, like, I think it's really what Richard was talking about, right? The reason why it's kind of unicorn, unicorn, right, is that they absolutely need both this incredibly hard head, but they also need the ability to, like, listen, right? So it's sort of like, wow, it's like the toughest, hard-headed, bullheaded person in the world who's coachable. It's like, what the hell is that, right? So I know it's almost a joke, but, like, we do look for that.
Yeah, I mean, 100% same thing here. Even at Techstars, we look at 6 things. Number 1 is team. Number 2 is team. Number 3 is team. Market, traction, idea. And the reason for that is, like, when you're investing at the stage that we're investing in, we're usually the first money into a company. And oftentimes what companies come into our accelerator programs are not exactly what they leave, or even multiple years down the line. And like Arweave is a fantastic example. Is when they started, they were actually doing something completely different than what they are today. And so I think it's just a testament to the founders and your ability to take adversity. And so for us, we really like founders, like everything that was just said here, but a particular emphasis of, like, have you really done hard things before, and can you withstand the inevitable intense amount of stress that's going to come your way? And then 2, are you somebody that are you a magnet? Like, do other people just want to contribute to you? Do you present that type of energy that's just, I may not exactly fully understand what's going on here, but I want to take my time to give you that intro. I want to join your team. I want to stay partnered to you. And that lets much less of like a rubric or something. It's much more of a gut feel thing, but certainly having a growth mindset, being somebody who's going to take advice and, choose which ones to listen to and which ones not to. But yeah, agree with a lot of what was said.
And since everyone mentioned about team, just to wrap up this conversation, I wanted you to provide maybe a 2-word advice for the team. What can the team do in order to succeed and get attention of investors in crypto and Web3 space?
So I think the first thing that there's a few things that you kind of can't really adjust, which is your personal history, right? Because the history's gone, right? So that's already passed, right? But to me, the things that you can adjust are kind of conviction, right? Which is when you look at investor conviction, investors are protected by diversification, right? So an investor conviction will always be a dramatically smaller fraction than founder conviction, right? So we just need to see people with insane conviction, right? That's super helpful. Right. And then, in a way, like, one of the beautiful things about an idea of a team is we study the patterns and the flow of conviction. Like, we recently had an opportunity where there was sort of a female founder who basically kind of went out and hired a CEO. And so I asked the CEO, I was like, so tell me about your conviction of this idea. Like, tell me how excited you are about this idea. He said, well, I first heard about it when Megan pitched it to us. And she was so fired up about it. And me and me and my buddy always wanted to have a blockchain startup. So I went back to Megan and I was like, we're not going to invest unless you're the CEO, all right? Because you're the one with the idea and the conviction. And you actually were so good that you convinced these other people to join you, right? So it's like, you're the CEO, you have the conviction. These other people are like, they're great, bring them along.
Conviction. I totally agree. I think it's really important. And Richard and Carson, just the word advice for founders. Well, I can say though.
So the one thing is for certain in the kind of highly uncertain world of startups, obviously, is that shit's going to happen you didn't expect. And so somehow you need to love what you do, and you need to be just on the kind of relentless side of reckless, I would say, somewhere between relentless and reckless in what the risks you're willing to take, the approach you're willing to take. And all of that's just going to build on what you said, which is, I think, absolutely right down the fairway. So yeah, on the cusp of relentless and reckless. That's my short advice.
Mine is pretty simple. Practice having hard conversations with your team, and practice can be unintentional practice, but it makes a huge difference. If you're planning on starting a company, you're going to have some really tough decisions come your way, whether you're successful or whether you're not successful. And I think the things that really slows you down is when there isn't alignment within the team on how you're going to navigate what your core values are, what the first principles of your company and your decision making is going to be. And so I think the best way to do that is just practice having fights in a constructive way, practice, dealing with really difficult topics, and make sure that, as the stakes get bigger, you're not having to keep revisiting how you're going to fight or how you're going to talk, because it's just going to happen over and over again. So get really good at it.
And definitely don't be afraid to try. That's how you can practice, and that's how you can learn. Thank you, everyone, for joining us today for this panel. And we're about to continue with startups and their presentations.
Oh, thank you.